All right, let's dive right in. Today we're talking about gold IRAs. You know, that investment that promises a solid, glittering hedge against a crazy market. But here's the thing. Beneath that shiny surface are some really critical rules. And not knowing them, well, it can cost you a lot.
So let me ask you a very direct question. When you put your retirement money into physical gold through an IRA, can you actually take it home? Can you hold it in your hand? You'd think the answer would be simple, right? Well, it's a lot more complicated than you might expect.
And for one couple, finding that out the hard way came with a massive price tag. We're talking over $300,000 in taxes and penalties. Their story is a huge warning sign for anyone even thinking about this. So let's break down exactly what happened and, more importantly, why.
So first things first, what's the big deal with gold anyway? Why do so many people turn to it for their retirement? Honestly, in a world where the stock market feels like a roller coaster, holding something tangible, something real like gold, it can feel like a solid anchor for your savings. It's a classic way to diversify and protect your money from inflation.
I mean, the benefits seem pretty clear on paper, right? You diversify your portfolio, you hedge against inflation, you own a real asset, and you still get all the tax advantages of a normal IRA. But then you see this last point, the promise some companies make about a home storage IRA, the idea that you can keep all that gold in your own safe at home. And that right there is where things get really tricky.
Okay, to really see just how wrong this can go, we've got to look at a real-world court case. McNulty versus the commissioner. This isn't some hypothetical situation. This is a true story, a cautionary tale that came straight out of the U.S. tax court.
So here's how it all went down. Back in 2015, the McNultys got some advice that they could use this sort of clever LLC structure to hold their IRA's gold coins at their house. They followed all the steps they were given. They set up a self-directed IRA, formed an LLC owned by that IRA, and then had the LLC use the IRA funds to buy gold coins. The coins were then shipped right to their home, and they put them in their personal safe. On the surface, it all seemed totally legitimate.
Yeah, well, the tax court had a very different opinion. And what's so telling here is the court's core reasoning. They basically said that the whole point of an IRA is that there's an independent third-party custodian protecting the assets. The moment an owner has personal control, it completely goes against, and I quote, the very nature of an IRA.
So, what was the damage? Well, the financial fallout was just staggering. The court decided that the second the McNultys took physical possession of those coins, it was exactly the same as if they had cashed out their entire IRA. That entire amount, over $317,000, was immediately considered a taxable distribution.
Ouch. Okay, so this whole story really brings us to the most important question. What are the actual rules? Let's push aside all the sales pitches you might hear and look directly at what the IRS says you have to do.
The key word you absolutely need to know here is distribution. In the world of the IRS, a distribution is any time an asset is taken out from under the protective umbrella of an IRA account. And they are crystal clear on this. Taking physical possession of your gold is a distribution, period. It doesn't matter if it's in an LLC or any other setup. You touch it, it's a distribution. And look, this isn't some interpretation. This is straight from the horse's mouth, IRS publication 590B. It doesn't get more official. It explicitly says the coins must be in the possession of the custodian or trustee. There's really no gray area there.
So when we say approved storage, what does that even mean? It means your gold has to be held by an IRS-approved custodian in a super secure, insured third-party facility, also known as a depository. It is not your personal safe. And this one surprises a lot of people. It's not even a safe deposit box at your local bank because you still have direct access and control. It all comes back to that legal need for independent oversight. All right, let's talk about the real cost. What actually happens, financially, when you get this wrong? As the McNultys found out, the bills add up, and they add up fast.
First up, if you're under age 59 and a half, bam, you get hit with a 10% early withdrawal penalty right off the top. And don't forget, that's on top of the regular income taxes you're now going to owe on the entire value of the gold. It's a painful 1-2 punch.
Now, how much tax you pay also depends on the kind of gold IRA you have. Think of it this way. With a traditional gold IRA, you usually get a tax break on the money you put in, so you pay regular income tax when you take it out. With a Roth gold IRA, it's the opposite. You pay taxes on the money before it goes in, which means your qualified withdrawals later on are totally tax-free.
Now, this doesn't mean you can never get your hands on your gold. When it's actually time to retire and you want to take a proper legal distribution, you've got two main ways to do it. You can take an in-kind distribution, where they literally send you the physical gold bars or coins. The key here is it's a formal withdrawal. It's no longer in the IRA. Or you can do what most people do and get a liquid distribution, where the custodian just sells the metal for you and sends you the cash. Much simpler.
Okay, after all of that, how do you actually do this the right way and avoid all these headaches? Don't worry, the correct process is actually pretty clear and secure once you know the steps.
Here's your 5-step playbook. 1. You pick a reputable gold IRA company to guide you. 2. You open the right kind of account, a self-directed IRA. 3. You fund it, either with cash or by rolling over funds from another retirement account. 4. You buy metals that meet the IRS purity standards. And 5, and here is the absolute most critical part, the metals get shipped directly from the seller to an approved depository. You, the owner, never actually touch them.
All right, let's just run through the big no-nos one more time so they really stick. Don't take physical possession. Don't buy unapproved collectible coins. Don't fall for a home storage IRA pitch. Don't forget about the annual fees for the custodian and storage. And finally, don't forget you have to start taking distributions after you turn 73.
You know, when it comes right down to it, getting these details right isn't just about following rules. It's about protecting the retirement savings that you have worked your entire life to build. Look, I get it. This can all feel a little overwhelming. If you really want to dig in deeper and understand every single detail, a lot of the good gold IRA companies offer fantastic free educational guides that just walk you through everything. To make it easy, we've gone ahead and put some links to a few of those resources for you right in the description below.
And all of this leaves us with one big question, doesn't it? Gold can be an amazing tool for protecting and diversifying your retirement. But if you don't know the rules inside and out, that promise of security can turn into a gilded trap real fast. The choice and the responsibility to get it right is yours.